Hey, Kip, welcome to F.A.C.E. I'm going to make you a panelist because I don't believe you brought anything that you want to screen share. And then I'm going to take control of the screen, waiting to hear your voice.
Right, can you hear me?
Got you, Kip. Hold on a sec. There we go. All right. Kip Herriage, welcome to F.A.C.E. How are you today, Kip?
Hey, very good. Thanks for having me on. Quite the honor.
Yeah,
I'm very impressed with what you guys had this morning.
Oh, thanks so much. Yeah, well, we believe in the team concept, and I'm impressed. You know, I do due diligence, and I went to your website and I checked you out. And before we get into the guts of the interview, Kip, you know, we can't avoid, you know, what's happening here. I know you're 70% fundamental, 30% technical, and I'm curious as to whether you can quantify the fundamental event we have with the possible missile strike in Syria, or it's unquantifiable.
It's largely unquantifiable, but I think that if you're Russia and you see Trump's tweet this morning, you can take it as a tweet from a man, or you could take it as a tweet from the military-industrial complex, knowing that that's what ultimately is backing Trump up. So if I'm not mistaken, we've bombed the crap out of 8 different Muslim Middle Eastern countries in the last 15 years. And I don't believe Russia's bombed anybody. So, you know, that's the reality as I see it.
Okay. So, Kip, I read a little bit about your background in the business, which is so impressive, and you're a very aggressive newsletter writer, and your results documented are, you know, mind-blowing. Okay. Tell me how it began for you. Were you in high school or college and started following the markets? Was it your dad? I'm guessing that because you're from Sugar Land, Texas, that perhaps you may have started watching things like commodity markets before even equities. Am I right?
Well, you're exactly right. And it's the first time we talked, very perceptive. By the way, Dale, I've got a pretty bad echo on mine. Can I do something to remove that?
Am I echoing or you are?
I am, not you.
Okay, I don't know. You called in, right? It's over the phone.
I did.
Steve, can you help us with that? The echo? I guess.
Hey, I can work through this.
Okay, I guess you're going to have to live with it, man. We're hearing you loud and clear. All right,
okay,
no
good.
echo here. Okay.
Yeah, so I'm actually from a little town called Elkhart, Texas, population 900. Grew up very lower middle class. Dad worked for the prison system. You know, it was we were surrounded by commodities. All the commodities we didn't have, and including money. And so that was my thought process growing up. Is that I don't want my kids to have this life. I want them to have whatever they want. And so I knew that I had to get to New York. And so that's my dad bought gold at close to $900 an ounce, $870. Right, he top ticked the market.
When the Russians invaded Afghanistan.
Yes, and I was in the meeting with my dad and his broker when my dad's broker talked him into buying gold at the very top. And yeah. Of course, it was a bear market for 15 years. So, yeah, following that, you know, I after I graduated from college, I found my way to New York. I had 2 great mentors, Michael Metz, director of research at Oppenheimer, and Ted Parsons, a local Houston guy.
Yeah, Michael Metz, I used to love when he would come on. I think in those days it was Financial News Network. So, yeah, Michael Metz, right. Really intuitive, great technician. The other guy I'm not as familiar with. What was his name and where was he from?
Ted Parsons, here locally at a firm called Underwood Newhouse, and an old Houston bond firm, and he was my first mentor. But both of those guys, their mentors worked in the markets during the Great Depression. So I grew up on those stories.
Okay, yeah. So you probably read Livermore's book, huh?
Absolutely. And I've got it, matter of fact, got it sitting right here on my desk. And also, Michael Madsen told me the first book I needed to read was Extraordinary Popular Delusions and the Madness of Crowds. So I've been a contrarian at heart since I got into business in '85.
Okay. All right. So I have your Kip Herriage page up here, and also have your Vertical Research Advisory page up here. So I was reading some of your recent commentary on this page, and you are contrarian right now, Kip, because you're very constructive on the market. I'm assuming you did bring up the potential double bottom that may hold here to give us a moonshot into earnings. 1 day's action with the S&Ps being down 20 handles today doesn't change your view, does it?
Not at all. If we break the double bottom, I'll be more concerned. If we stay, the way my investing system works is if we stay beneath the 200-day moving average, and I am a trend follower, if we stay beneath the 200-day moving average in the S&P 500 for more than 5 trading days, my stops will be hit at that point.
Okay.
And I don't expect that's going to happen.
Okay. So interesting, you brought up, I saw the YouTube video on your site, and you brought up the miners, and we have a lot of activity, gold threatening a weekly breakout, etc. I don't know about you, but I was always taught that the shares should lead the way rather than the commodity. You look for leadership or relative strength in the miners compared to the bullion. Instead, it's been the other way around for months upon end here. Are you seeing the same thing, or do you think that you could still be long the miners even though they've been the laggards compared to bullion?
It's really been breaking my heart, because I've been in the second ever newsletter I wrote after I left Wall Street and started the VRA in 2003. In my second update ever, I recommended gold and silver. Gold at 275, silver at 475. And so this recent action in the miners over the last year or so has been really disheartening. And I'm with you. Until the miners start to lead the metals, it's hard to be bullish. But I will say it's nice to see them up, getting closer to the 200-day this morning on GDX, which is I think it'll be a major plus.
Okay. Let me ask you this: because you're a fundamentalist, do you think some of the reason is balance sheet problems for some of these miners and maybe too much leverage? Or how about geographic location of, huh?
How about manipulation?
Okay.
I know the guys at GATA pretty well, the Gold Antitrust Action Committee. I'm sure you guys all know them here as well. And I've known those guys for about 20 years. Their work is solid. Gold and silver have been grossly manipulated. And if you can tell us when that's going to end, then we can know that gold will be about $5,000 an ounce in the next 1 to 2 years.
Okay, so Jim Sinclair opened that exchange, I believe, in Shanghai for gold emancipation from the paper. So right. Cash and carry, and he says the same thing as far as targets. So what do you think could end this type of manipulation? And I saw a COT chart, and this is the first time large specs have been net short silver in I don't know how long, and wonder if you have a view on the silver gold ratio, which is not at but close to historical extremes. If you think that perhaps on the next wave, because you're bullish, the global synchronized economy in the US, that silver being more of an industrial might outperform gold on the next move.
I'm not an expert on those ratios, but I've read everything you're talking about. I think we can both agree when these finally break out, they'll be gone. As far as what might precipitate that and the elimination of this manipulation, honestly, I thought President Trump was going to be the answer to that. I believe he could be the answer to a lot of ending of manipulation. Been a little disappointed so far, but I still think it's going to happen in his first term. I think we'll see gold have a rocket ship move higher.
Okay, so let's get back to what you're saying in VRA and what I read yesterday and your bullish stance, a lot of it based upon fundamentals. Are there sectors within the market that you favor? And what I also found interesting is that when it comes to diversification, you're never in more than 12 stocks at a time. You love concentration of potential and risk. And I'm wondering, what are your favorites in here with what's going on? And obviously, I think you're looking for new highs in the market. Why don't you give us your view on current market structure and what sectors you like in the market now?
Michael Metz taught me when I was about 28, 29 years old, over diversification was the easiest way to lose clients. He said you gotta have big balls. You gotta be smart. You gotta find the right sectors, then the right stocks, and you gotta go heavy. And so I've always believed, even with my clients, Wall Street, I've always believed that I'm gonna have my clients in no more than about 10 to 12 stocks. And I'm very aggressive. I make that known up front. And if they want diversification, they should probably buy an index fund away from me to balance the risk that I bring to the table. Having said that, I beat the S&P 500 14 to 15 years and did 37% last year. So as far as the where I am right now, I love the biotechs. I believe there's a wave of money coming back into the U.S. Much, if not most of it's going to find its way into the biotechs. If you look at the bullish, the ascending channel in the biotech, like XBI and BIB, it's one of the prettiest 2-year ascending channels that I've ever seen. So I think every time it hits that lower channel line, which it did 2 days ago, that's a screaming buying opportunity.
Give me that symbol. Give me that symbol again, Kip.
XBI. XBI is the S&P 500 biotech ETF.
Okay.
And if you're like me and you're aggressive, you would buy the 3-time leveraged biotech ETF, which is symbol there is LABU. I use leveraged ETF exclusively to crush the markets as often as possible. And again, it's about buying it right, keeping a stop so you don't get hit more than about 7 or 8% in case you're wrong on the timing, and then riding the wave. And I believe by the end of this year, my target for the Dow is 30,000. That's been the case for some time. I wrote a book that I finished about a month before Trump was elected that said if he was elected, we'd have the greatest bull market since Reagan, and it's all based in tax reform. Remember, Reagan's tax reform took about 1.5 to 2 years to really find its way into the markets because of the way it was structured. Over the last 6 years, the Dow Jones more than doubled, and we'll see the same thing with Trump's bull market.
Okay, does that equate to about 4,000, 4,200 or so in the S&P?
Yes, it does.
Okay, because some of the super bulls, I know that's their target. That they have a different view after that than
yes, I do too.
Stated. Maybe these this tax package here is a little bit more front end loaded, that it won't take as long to take effect as Reagan's did.
That's what's being underestimated by most people today. They have no idea the power of this tax reform. And we may not see a lot of it in Q1 earnings reports, but watch what happens in Q2, 3, and 4. As we know, the market anticipates 6 months out. So if we see any weakness on Q1 earnings, that's the best buying opportunity of the year.
Let me ask you this, knowing you're a bull, and knowing that there are reactions in bull markets, really none until the recent event, when VIX went to 50 and we have a different volatility regime. Do you also take positions in bearish 3-time ETFs ever?
Yes. It really doesn't matter to me if we're in a bull market or a bear market. But I only trade one side of the market.
All right. What are some of your favorite bearish ETF 3-time ETFs to trade? When I'm not saying it's to do it now or at any time, but what are a couple that you like to trade? Well,
I always stick to the major indexes, and so that would probably be like a SPXU which is a 3 times short S&P 500.
Right. Okay.
And honestly, I'm kind of blocking those out now because I'm so focused on just one side of the market being long.
Okay, so your take on oil, being a Texas kid, and what's happening now, challenging the recent recovery highs here. You have a view on that, and a way to, are you participating since up until maybe a week ago? Oil's been going up, kind of like gold. Gold going up, the share's doing nothing. Same thing was happening with oil going up, and the shares up until maybe a week or so being comatose. What are you doing in there?
Well, I was out of oil at 100 as all my Houston buddies were starting new companies and leveraging up, and now many of them are out of business. I went long at 32 and still very long here. I have a focus on small cap companies. This is, again, kind of my approach is I like to get to know small cap companies, 100 million to 3 to 4 billion in size. Get to know them, the management, invest for the long term with these companies.
Yeah, you're a real grassroots kind of gumshoe guy. You remind me of Sarge on CNBC. I mean, he goes to the company and he meets the people and he talks to employees. I mean, you do on the ground type of research that most people won't leave their workstation, and unless they have a chart with them, they feel they have anxiety attacks. So so you still do that, huh? You still go to the companies and try and know management. Do you ever bet on companies strictly on management? I have a friend who does a lot of mining shares who, the CEO is a jockey to him. And, anything that McEwen does, he's pretty positive on it. You do that too?
Yeah, one of my best returns of the last 3-4 years was Ivanhoe Mines, and I bought that strictly because of Robert Friedland, and bought that at $1.50, sold it at 22 in 9 months, and that's because I got to know Bob Friedland. Not many people did, but I met him at an event, got to have a private lunch with him, and anything he's involved with, I want to be part of.
Okay, so let me ask you this: what's your most important trading rule for yourself when it comes to risk management?
Position sizes.
Oh, beautiful. I wrote a song, Use Less Leverage. Okay, so trade small, and do you scale into positions, Kip? Or, I try and tell people don't expect perfection at the crab table, and personally, I have a tendency to be early, so I always piece in when I'm scaling into ETFs instead of going all in and all out. Do you believe in that? And do you ever take partial profits?
I play for major wins, and I do scale in. I never average down. I average up only. And I like to think that if you understand the combination of the fundamentals and the technicals, and you can block out sentiment, taking advantage of extreme sentiment to be aggressively long or short at those extremes, that's where the big money's made. In the other positions, I'm a long-term investor, like a Peter Lynch. I've owned one stock for 10 years, and I probably own it another 10.
Okay. I just want to get back to oil a little bit. As you can see, Kinder Morgan, some of these types of deals, or an ECA. So even though crude's been rallying, a lot of the shares have not. So you go to small caps. What would be a small cap example for participating in a oil bull market?
I'm going to give you my top pick in this space here, and it's a company called Falcon Oil and Gas. It is a penny stock. It's at 30 cents a share right now. The symbol is the U.S. symbol. It trades on 4 exchanges internationally. Okay. U.S. symbol is Frank, Oscar, Larry, George, Frank, FOLGF. They have what is probably the largest natural gas discovery, unconventional, outside of the U.S. ever. It's in Australia. And their partner there is $12 billion Origin Energy, the largest energy company in Australia. And they've already proved up at least 6 trillion cubic feet. But my belief, and I know this company really well. I helped take them public. My belief is that there'll be 50 to 70 TCF when it's all proven up in the next 2, 3, 4, 5 years, something like that.
There'll be what, a 50-cent stock, 70?
No,
70.
I'm sorry. That'll be 50 trillion cubic feet of gas, and this stock, unless they sell the company, which they probably will, it's a minimum $3 stock, but it could be a $10 stock depending on timing.
Okay, and you prefer that over something like a Chesapeake, which is out of favor.
Absolutely. And
is Chesapeake
I knew
a problem?
I knew Aubrey McClendon pretty well, and I used every opportunity to short that stock instead of buy it. Of course, he's no longer with us, but
right. Okay, and they have all kinds of issues. That's why it's fallen out of favor, balance sheet issues, etc.
Yeah, I avoid companies with a lot of debt and management problems.
Yeah. Okay. What a great interview, Kip. I really appreciate you coming on, and I want to encourage people, if they want to follow you on Twitter, that they could follow you at K Herriage. Here you go. Here's Kip on Twitter, right here. And here's his website, kipherriage.com. Here's his handle. And I believe Kip has a 14-day trial. Trying to make a nice commercial for you, buddy. So here's your free trial. And I really enjoyed talking to you, Kip. I had no idea. I reach out to people. There was probably some tweet that you did that caught my eye, but I'm glad that our paths crossed, and I'd like to have you on a few times a year to keep in touch with you. And like it or not, you're now my trading warrior brother.
I am honored. I followed you for years on Twitter, and it's a real honor to be here with you. Thanks so much, Dale. All
right, Kip. Good hunting, everyone. Kip Herriage. Follow the guy. Check out his newsletter. And yeah, Kareem, I guarantee you he's probably following some uranium stuff. Aren't you, Kip?
Absolutely.
Okay. All right, everyone. Have a good day. See everyone tomorrow. Good hunting the rest of the day. See you in the chat room. And remember, above all, don't just count your pips, count your blessings. I count working with you guys every day as one of them. Meeting a guy like Kip Herriage and sharing intelligence with the community as another. Good hunting, Kip. Thanks once again for being with us. You're very welcome, Dan. You're very welcome. See everyone tomorrow.